Thanks for joining us today on The Close. I'm Morella Fernandez. Markets close in 30 minutes. Let's get to the stories we're following out of the BNN Bloomberg newsroom. The price of oil plummeting today, down over 10% for West Texas Intermediate's May contract after Iran said the Strait of Hormuz is now completely open. The foreign minister made the announcement in a post on X saying that in line with the ceasefire in Lebanon, the passage for all commercial vessels through the strait is completely open for the remainder of a ceasefire period. The U.S. President Donald Trump also posted about the reopening on Truth Social, where he thanked Iran for that decision. Netflix shares are falling today, down over 10% after the company issued a weaker than expected outlook and also announced co-founder Reed Hastings will step down from the board. Netflix forecasts second quarter profit below expectations and projected revenue that also missed estimates. The company says it plans to boost spending on content and expand sports programming. Air Canada will temporarily suspend flights to JFK Airport from Montreal and Toronto, citing the higher cost of fuel. The airline says jet fuel costs have doubled since the start of the Iran conflict, and the company says lower profitability flights no longer make sense. The suspension to JFK will begin June 1st and will go until October of this year. Alcoa shares are trading lower after the company's earnings and sales missed estimates. Operational disruptions like maintenance outages and supply issues linked to the closure of the Strait of Hormuz weighed on results. Alcoa says higher energy and freight costs offset stronger demand, even as the conflict curbed production in Middle Eastern aluminum hubs, including the United Arab Emirates and Bahrain. A positive day on the North American markets after the news coming out of the Middle East, with the TSX gaining 282 points so far in the day, so it's up 0.8%. And American markets, we have the S&P up over 1% today. The Dow Jones a 1.8% move up. That's 857 points so far. The Nasdaq gaining almost 1.4% or more than 330 points. Oil fell sharply in early trading after news of the Strait of Hormuz that will reopen. Our next guest says the conflict seems far from resolved. Joining us now is Rebecca Telscher, Portfolio Manager at New Haven Asset Management. Rebecca, thanks for joining us today.
Thanks for having me.
So markets are popping, as you see, but are investors being, you think, too enthusiastic considering the false starts we've seen so far?
You know, it's interesting. Since the beginning of the conflict, I feel like the market's been, erratic both to the upside and to the downside. So, we've been owning a lot of, some of these like good quality oil companies and pipeline companies for years. And so when we saw, them shoot up really aggressively at the start of the conflict, we were like, you think we would be happy, but actually, it was kind of disappointing. One, it makes it more expensive for us to buy more for new clients. Our dividend yield, is going down for a lot of these names. And also, we weren't just buying it. Like, we weren't buying this fad. We thought it was maybe a short-term trade, so we held off on buying more. Now, after today's move, CNQ, for example, is trading at what it was trading at prior to the Iran conflict. And it's interesting because oil is, 50% higher than what it was, a few months ago. So I think it seems like there was probably an overreaction to the upside at the start of the conflict, and now we're seeing an overreaction to the downside because I don't think the conflict is resolved. Even if the conflict is resolved, we are still dealing with higher oil prices for now until, things get sorted out, which would take a while anyways. So, for us as long-term investors, we're not capitulating. We're not, trading day to day. But for clients that, let's just say we held off on buying some of these initial oil positions, absolutely, I've been buying today for them.
Have you been trimming at all for those already holding oil?
That's a good question. So, no, again, we could have maybe, but The way we looked at it is the longer you own a stock, the more you're compounding that yield, you're reinvesting those dividends. And so, we're not really traders for better or for worse. We really are just, buy and hold, and we look for good and sustainable value. And even though it was trading, at record highs, it's still a name that we really liked. It still is the top, quality, oil producer, speaking of CNQ. So, it's something that we're going to want to own for the next 100 years. The way I look at it is, they're making money when oil is trading at $50 a barrel. Then, when it went up to over $100 a barrel, they're just, flying in, like they're just collecting so much cash flow. So happy to own it anywhere, along the line. So for our clients that already owned it, we kind of held on to it. And now we're just going to be buying more.
All right. Would you pick up other energy stocks as well today?
Yeah, I added a little bit to Freehold. Again, it was interesting. Freehold royalties, back in the day was trading at a 9% yield. And so, again, the Iran conflict, it really diminished a lot of the yields, that we had in our portfolio. So, it's down 3% today. It picked some up at 16.50 and it yields, over 6% right now. So, again, we're looking for the opportunity to buy something over the next 5 to 10 years. And so if it's getting a little bit cheaper today, then that's great. Do I think it could go higher from here? Like I still do. The conflict to me is far from over. I think there was, a breath of fresh air when we saw that the Strait of Hormuz is open, but there's still a lot of tension there. I think we're far from coming to a permanent deal between Iran and the US. And besides that, I'm looking at all the other risks going on right now that maybe weren't there 6 months ago. And I'm scratching my head at what the market has done over the past, just in the past 2 weeks alone. Like the S&P 500, the NASDAQ, they're all up, 15 to 17% just in the past, 2 weeks of trading. But in the past few weeks also, we've seen, signs that the economy is weakening. Energy infrastructure that was destroyed or damaged during this conflict that is going to take 5 to 7 years to repair. Inflation is now at a higher risk because, again, oil prices, while it's down, it was down 13% this morning, down 8% now, it's still at $90, which is 50% higher than what it was prior to the conflict. And then you top in, the risks of IA. Have those completely gone away? I'm not sure. The risk of private credit, is that still an issue? The market just seems to be completely disregarding any type of risk or bad news. And so we're very cautious right now with this market.
I was going to ask you if you noticed any other sort of general trends aside from energy.
Well, exactly. Markets really just, I feel like markets have been very expensive for a very long time. We can get into the reasons of that. We probably don't have time in this segment, but, a lot of it has to do with, government spending, central bank policies. But, if you think about central banks right now, I wouldn't want to be in their position, right? Because you're dealing with a weakening economy, employment numbers that, are not great and they keep getting revised lower. So that would be, an incentive for them to lower rates. But then you're also dealing with higher energy prices, which really trickles down to almost every part of the consumer and impacts the prices of all goods. And so with inflation, threatening to go higher, then are they going to be able to cut rates or are they going to have to raise rates? So again, I wouldn't want to be in that position. Market's not really counting on is not really discounting or not really pricing in any of those risks. So, for us, we feel valuations are still really high. We saw risks of valuations compressed, with the threat of AI and how that was impacting software companies. And now we're seeing that dissipate, as the NASDAQ, which is very tech heavy, has increased, 17% in 12 or 13 trading days.
Rebecca, I got to leave it there. I'm out of time. Rebecca Telsher, portfolio manager in New Haven Asset Management. Thanks for your time. Have a good weekend.
Thank you. Same to you.
All right, oil prices we've been talking about collapsing today on news of the Strait of Hormuz reopening. More on that topic in just a moment. Iran has declared the Strait of Hormuz open to shipping. However, my next guest advises investors to stay cautious, noting it's not a return to the previous status quo. Let's go to Matt Smith, lead oil analyst at Kepler. Matt, thanks for joining us today. What is your interpretation of how open the strait really is today? We're hearing about 8 tankers move through.
That's correct. So there's the Strait of Hormuz, and then there is the Strait of Iran, essentially. So what we have seen develop over recent weeks here is essentially a new thoroughfare where the tankers go up towards the north and then pass through Iranian waters. And so it's essentially, whether it's been acting as a place where they are taking tolls or otherwise, that is where you are granted permission to pass. And that's where we've seen those tankers moving. You can see it here, that's the safe passage. And so interestingly, just in the last hour or so, we've heard that there have been a number of tankers, or we've seen a number of tankers approaching that safe passage to try and pass through, and they have abruptly turned around. And that is just reinforcing the point that the Strait of Hormuz remains closed. You essentially have Iran still in control of the thoroughfare.
Yeah, we're taking a shot here, and I love some of these live shots. I'm not sure if this one is live or not. I don't think it is, but it tells you in real time sort of how quickly those ships are moving or not moving through that key turning point in the Gulf. You mentioned tolls. Is there an indication that the ones who have gotten through are still paying tolls?
We don't know, but the point is the ones that are passing through predominantly are Iranian. They are empty as well, so it's not like they are full and are leaving. We're seeing some coming in, some going out. But the key takeaway here is that they have been given the blessing to pass through from Iran, whether they're paying so or not. And so everybody else essentially is not being able to pass through here.
Okay. Is there any idea of how long it will take for shipping to get back to normal? And what would you say stands in the way of that?
Gosh, so simply the reopening of the strait is what we need here, and that means the Strait of Hormuz. That doesn't mean the passing of these vessels through that safe passage. That safe passage can probably only take about 15 vessels per day, something like that, because of the laborious process to get approval from Iran to pass through there. So the first thing we need is the strait opened back up again. If, as and when that happens, we need probably the 2 shipping lanes that are currently not being used, but were used before this conflict. They're about 2 miles wide there, to be both being able to move these tankers out of the Strait of Hormuz. So we need to get the full tankers out. We then need to start getting empty tankers in. Those full tankers, though, need to go discharge in Asia and then come back again. That takes the best part of about 7 weeks, something like that. And then you have to increase production in the Mideast Gulf there. You have to get your refineries ramped back up as well to be able to run that crude, to then be able to load those products onto tankers. And so it's a series of different logistics that need to fall into place here for the strait to get back up to normal. Key thing is, if the situation was resolved today, we probably wouldn't be back to normal until at least the summer here, sort of July time. And so we are still looking at an extended period of dislocations here, regardless of any sort of positive movements going forward here.
So, Matt, what is the near-term outlook for Asia, which relies quite heavily on the route as compared to others?
Really bad, and that's the problem. People don't understand this. We have seen the final cargoes that loaded pre-war in terms of oil and heading out of the Mideast Gulf to Asia. They have basically delivered all of those cargoes now. 90% of the crude that comes out of the Mideast Gulf goes to Asia. They are not able to replace that 15 million barrels per day, or 90% of that they were taking previously. And so these refiners in Asia, so whether it is China, South Korea, Japan, etc., they don't have the feedstock to then run through their refineries to produce products. So now we are starting to see implementation in terms of protectionist measures to make sure that they keep those exports back from going out into the region or going elsewhere. And so you're going to hear more and more about fuel scarcity, restrictions, pumps drying up, all that type of stuff in the coming weeks here, because the feedstock they need to produce these products is simply not arriving, and there simply isn't the substitute to come in and replace it.
Okay, we know that North America, for the most part, not in the same dire straits because both the U.S. and Canada produced a lot of energy. But I'm wondering if you feel like North America will start feeling it more acutely as well in the nearer term, and what that looks like.
Yeah, absolutely. So there's going to be pockets of this. So the immediate obvious one is jet fuel to the US West Coast. So they rely upon South Korea a lot for about 85% of their jet fuel imports. South Korea is dropping its exports, it's dropping them to the US. So in the coming weeks here, the US West Coast is going to receive less and less jet fuel. And so you're already starting to hear about flight cancellations, issues on the West Coast already there. But it's not just that, it's really the US on the whole. While you say, you mentioned there, it's like almost insulated from a supply perspective, not from the price perspective, but in terms of supply, because everywhere else is getting so scarce. You're starting to see, jet fuel being pulled out of the Gulf Coast, which isn't typical, and going across to Europe. You're seeing diesel being pulled out of the US East Coast simply because prices are that much higher elsewhere that it's driving on these dislocations and new kind of anomalous flows.
Okay, I do have to leave it there, Matt, but appreciate you joining us on The Close today. So thanks for your time.
Thank you.
Coming up next, the big question, should Washington have ever pulled out of that 2015 Iran nuclear deal? What's the point of the current conflict? We'll get into it when we come back. Iran's agreement to reopen the Strait of Hormuz depends largely, of course, on the ceasefire holding. The U.S. president saying a blockade of Iranian ports would continue until a complete peace deal comes together. Let's get to Kelly Grieco on this, senior fellow at the Stimson Center. Kelly, thanks for joining us today.
Thank you for having me.
How are you interpreting this, that the Strait of Hormuz is going to fully reopen? Are there a lot of caveats we're not seeing here?
Yes. I mean, in some sense, this is wordsmithing from what we seem to be learning, in the sense that the Iranians are now saying it is, quote, open as long as you notify them in advance, you take their routes. And it seems like it might even include having to make that payment to the Tehran toll booth.
Okay, that has been one of the big questions today. Are they still charging ships to get through? We've apparently seen some ships get turned back. And we see that the U.S. blockade is still there. Do you think it has been successful on putting pressure on Iran, and that's why we're seeing some movement today?
Yes. I think the response, the reason the Iranians made this announcement, even if it's more, a gesture rather than, a real change on the ground, I think it was more response to the agreement with Lebanon, the ceasefire with Israel. And sort of that was a step taken in good faith. And the Iranians are trying to reciprocate in some way. I don't think it's actually a response to as much to the blockade itself by the United States, because that wouldn't really be impacting Iran in any serious way at this point.
And why keep that blockade in place if the Hormuz Strait is reopening?
Yes. Well, I think, the blockade is only targeting, Iranian vessels, those that go to Iranian ports that may be carrying their energy out to, to export, particularly like Chinese vessels, things like that. So it is a more selected, targeted blockade, if you will. But I think the reason it's being kept in place is the United States is trying to maintain leverage, just as the Iranians have sort of opened, if you will, the strait, but really they're demonstrating they're controlling it through the limitations they're imposing on that kind of opening. It's the same thing, I think, with the blockade here as well. It's a reminder to the Iranians that the United States can still continue with this blockade if an agreement is not made.
What is your take, Kelly, on reports of the U.S. unfreezing funds for Iran as part of this? Donald Trump is denying that, but what's your take on the report as we've seen?
Yeah, so what we're hearing about these negotiations, I'll just say it's a bit all over the place, because the president has been on social media in the last couple hours and giving interviews to the media and saying many different things that kind of create some confusion about what actually is on the table. Originally, we were hearing it would be maybe a 20-year moratorium on enriching uranium, and in exchange, the United States would provide sanction relief in the, somewhere around $20 billion in sanctions relief. This sounds a little bit like the agreement that we originally had under the Obama administration, in the sense of they agree to stop in uranium enrichment, particularly weapons grade, and in exchange get sanctions relief. But it's very unclear exactly what might actually be on the table at this point.
Okay, so was it a mistake then for the Trump administration to pull out of that deal?
I mean, I think it's clear, it should be clear if we're looking at this from, purely a rational perspective, a strategy perspective, that it was a mistake. When Iran was in the deal, even if it didn't cover everything, like its ballistic missile program, it was not engaging in enriching uranium. As soon as the United States pulled out, Iran has, since then, enriched about 450 kilograms of, a weapons grade uranium. And now we've had to go to war over that. So, there was an agreement in place. It was actually doing what it was supposed to do, even if it didn't solve every problem. And we can see through the course of this war that we're headed back to an agreement that's probably not going to be all that different. Though I will note that at least what we're hearing so far around agreements, we're not hearing about monitoring. And that was one thing that was also part of the original agreement.
Interesting, because that was a key part of the agreement, is they want the monitors to be able to go in there and take a look around. So if uranium, some sort of agreement gets hatched with regarding uranium, what about control of the Strait? Right now, we know Iran is making huge demands about what kind of control it has over the waterway. And do you think that the U.S. will allow them some leverage there?
Yes, I mean, I think there are two real sticking points, it seems, in these agreements. And one is the nuclear one we talked about, and the other part is the Strait of Hormuz. And the real challenge here is that Iran knows that this is its source of leverage and it doesn't want to easily give it up. So I think, it seems like it is coming under more international pressure, including from some of its own, countries that are more friendly towards it, like China, to actually allow an opening. What I think we're probably going to see is some kind of compromise that does allow an opening, but I believe that Iran will retain some level of control around the strait.
Give me a timeline for this process. I mean, it's gone a lot more slowly than Washington had originally put out there, or at least the American president thought it would take. Where do you see this going? Sort of, is it going to be a 6-month process? Is it going to be sort of a 1-year process before they finally come up with something that both sides can agree to?
Yeah, so, my sense, just based on what we're hearing, is that we might see some kind of broad framework agreement in the next few days. Essentially, that there's there's an agreement in principle, and then I think what you'll see is it'll take a few months for them to work it out more formally. But they'll probably try to buy time during that. The ceasefire will be continued, and you may start to see some more regular return to shipping in the Gulf. But I think what we're going to see is it's not going to be an overnight thing. What we're going to see is probably a gradual, step-by-step process, particularly because there's not any trust between the two sides, and so each side sort of reciprocating tit for tat to allow more of a return to normal.
Got it. Kelly Grieco, thanks for joining us. Appreciate your time today.
Thank you.
Coming up next, the closing bells on Bay Street and Wall Street. Here are the closing bells for the end of the trading day and the end of the trading week. At the NASDAQ, Alamar Biosciences ringing the bell. In New York, it's Pinnacle West Capital Corporation. You're watching Close on BNN Bloomberg. I'm Morella Fernandez. Here's how we ended the day on Bay Street and Wall Street. The TSX Composite gaining 294 points today, or 0.86 of 1%. Ending the day, 34,346. It's still not a record high. It has a little bit more to go if it's going to get there, but still a good day for the TSX in Toronto. Let's get to the U.S. The S&P 500 up 1.2% today. And by the way, that is a record for the S&P. 7,126 is where it ended the day. The Dow Jones gaining 869 or 1.8%, and the Nasdaq up 365 points, up 1.5%. Record for the Nasdaq there as well. Let's get to the movers in Toronto. A lot of the precious metals moving today with the news out of the Middle East. Nova Gold at the top here, up 7.8% or $1.09 per share, taking the share price to $14.97. It's up 256 over the last year. Avino Silver also gainer today, almost 8% up on the day, taking the share price to $10.62. Stephanie Hughes is going to dive deeper on this one in just a moment. And then Seabridge Gold also moving 7.9% today. That's $2.97. Share price here at 46.05. Energy stocks are on the other side of this move today. Vermilion Energy down about 8% or $1.36 to 15.72. And then CNQ, which has been a big gainer the last 6 weeks, down today 7.3% or 466, taking the share price to 58.81. Methanex also moving today. It dropped over 7% or $5.70 a share. Let's go to Bloomberg's equities reporter Stephanie Hughes. She joins us now. Stephanie, we'll start with Avino, silver and gold. A lot of the precious metal stocks are gaining today. Give us the dive on this one.
Absolutely, Marella. So, yeah, it's been a very precious metals heavy day. Happy Friday, by the way. So the way I wanted to tell the story was through Avino, silver and gold mines, which gained as much as 12% at its highest point today, marking its biggest intraday boost since early February. That stock also hit its highest level in about a month and topped the best performers list on the TSX before it gave up that ground to Nova Gold as the trading day went on. But it did spend a good chunk of the trading day as the top of the leaderboards there. So it's joining other precious metals names moving higher as the price of gold hit its highest level in about a month or nearly a month after Iran announced that the Strait of Hormuz is now completely open for commercial ships earlier this morning. So that marked a major step forward in securing a peace deal, essentially. So bullion prices rose by over 2% at its peak before pairing up some of those gains. And then silver was also up by 5% at its highest point today. So it's not just the Vino, though they led the group today for the most part. We're also seeing a boost in Nova Gold, as you mentioned, Seabridge, Perpetua, and many others. So it's a total inversion of the dynamic that we've been seeing in the last few weeks where at the height of the conflict, gold names were struggling, and then oil names were really rallying. But now we're seeing gold's getting its shine back, and it's oil that is in the red there, Marella.
Okay, let's get to the flip side of it, which is energy, of course. We'll start with Vermilion. What happened there?
For sure, yeah. Speaking of oil names, Vermilion Energy spent most of the trading day at the bottom of the worst performer list after that stock dropped by nearly 12% at its lowest point, hitting a month low. So that's also tied to the headlines that we were just describing, that Iran was looking at opening that strait during this 10-day ceasefire in Lebanon. So it's opened the door to let commercial vessels come through again, and that's really sending the price of Brent crude down by double digits. So that also caused other energy producers in Canada and elsewhere to also fall, including Vermilion and other TSX list peers like Canadian Natural Resources, Athabasca, Cenovus, and others. But just as an aside for the TSX more broadly, the gains in gold offset the losses in oil for the TSX today, helping that index reverse all of the losses it suffered since the beginning of the Iran war. So it clawed back those gains, and it was really bolstered by gains in materials names and infotech names like Shopify, Marella.
Okay, we'll see if it holds, if the conflict, daily, hourly changing news changes what's going on at the markets. Thanks for that, Stephanie. Have a good weekend. Joining me now for Mover South of the Border is Bloomberg's Avalon Purnell. Avalon, let's talk about Carnival Cruises. How is the oil sell-off impacting that stock?
Absolutely. So it jumped about 7% today. That's after airlines obviously weren't the only ones moving. There was a ton happening in the cruise lines as well, mostly given the fact that oil accounts for a large portion of Carnival's cost. And analysts have been warning since the start of the war in Iran about how exactly will they be able to manage cost and also margins throughout this conflict. And also important to mention that at least for most of these stocks as well that are within the cruise line space, it's not just about the oil, it's also about the different cancellations and modifications that they have to make to itineraries, especially if they want to go through the Mediterranean. But Bloomberg intelligence analysts writing that they predicted that the fuel supply disruption could hit Carnival's 2027 net income by 36%. So definitely investors are cheering the fact that potentially this could be wrapping up sooner rather than later.
Okay, we know that, of course, airlines are affected by the higher price of oil as well. In Canada, Air Canada is changing flight routes or giving up on some for a little while because of that. In the airline industry
Absolutely.
in the U.S.,
United Airlines is a semi-similar story. Jet fuel accounts for nearly a third of the cost to airlines. And after a tweet attributed to the foreign minister of Iran saying that the Strait of Hormuz will remain open to all commercial vessels earlier this morning, all airlines were generally up today. And airline stocks have taken a very heavy beating throughout this year as investors continue to question how these companies will be able to manage costs amid these geopolitical concerns and market volatility broadly.
Okay, let's get to Ally Financial reported earnings. What happened there? Okay, it looks like we may have lost our connection with Avalon. We will leave that conversation there. Coming up next, North American markets skyrocketed today after Iran announced, of course, the Strait of Hormuz is open. Back in a moment. North American markets rallied today with the S&P and Nasdaq closing at record highs, of course, after that announcement in the Middle East. Let's go to Brooke Thackeray on this, research analyst at Global X. Brooke, thanks for joining us today.
Thank you.
How much of today's news do you think was already priced in?
Quite a lot, actually, because we've seen the stock market move from a very oversold position to an overbought position very quickly. We've seen all-time highs be reached. We're above where the war started. February 28th, we're above that level. And we've done that very rapidly. So investors have been front-running this. And you have to ask yourself, is this buy the rumor, sell the news? Is this going to continue?
Okay, let's talk a little bit about whether you expect another fizzle. We've seen this happen over the last 6 weeks plus, where the news ignites optimism and then it fizzles, within 48 hours. So do you expect another fizzle here?
Well, overall, the progression, I know exactly what you're talking about because, we see a burst where Trump comes out and says the war's over, and then we find out it's not, and then we've seen that repeatedly. Overall, we have seen some positive announcements that do seem to be fairly, at least going in the right direction at this point. But maybe that provides a little bit more to the markets. There's a lot of FOMO going on where investors just don't want to miss the rally that's taking place, and they're just piling. And we saw a whole bunch of meme stocks go up this week as well. So a little bit of excitement. So maybe we do see a little bit of a carryover, but the overall progression of the news is positive, despite even today we saw the Iranians come out and say that the Strait of Hormuz is open, and Trump says, well, the blockade remains in place. I mean, we're still getting mixed signals back and forth here. So, but the progression is positive. I think the market on more positive news can still move a little bit higher here, but I don't think we're going to continue to scream higher like what we've seen for the last little while. It's a very narrow market as far as breadth goes. I mean, we saw 15 stocks at their 52-week highs when we reached an all-time high. That just shows you how narrow this market is. So yeah, we have been front-running. I think a lot of this is priced in, and any bad news that comes out can really affect the market at this point. And that could happen. We've seen both sides really come out with mixed messages for quite some time.
Okay. Has any of what we've seen so far, you think, started to impact earnings yet?
Not yet. I mean, we're going to see the earnings. We saw earnings start this week with the bank announcements. We see a very busy week next week coming out. I mean, there'll be certain areas where those we'll start to see some announcements being made, and for certain companies specifically, as far as commodity companies. But overall, it won't really be affecting the earnings yet. So it's going to be interesting to see how the earnings do. But if we take a look at Q2 earnings, what we're seeing now, because there's a lag in place, because this really is a March, April phenomenon that's taken place, really at March as far as earnings goes. It's in the tail end of the quarter. So it really will be a Q2 event. And so I'll have to try and adjust for that later on, depending on what happens with the war, if it comes back again or we do have some sort of truce.
Let's get to Netflix, which we saw dropping today after sharing earnings yesterday after the end of the trading day. I know investors are looking at the forecast and they're not that happy with it, but is this a marker of something else?
Well, I mean, so you have to wonder, so is this a Netflix phenomenon, or is it losing ground to competitors, Or is this also partly because we're seeing some weakness in the consumer discretionary sector overall? We're finding investors or consumers being tighter with their dollars. And I think it's a combination of both. We've seen Netflix really drift around. They didn't manage to get the deal done with Warner Brothers on that. They really haven't really come up with new developments recently. So it's been a little bit stagnant. Investors are concerned, and the outlook's not as strong as expected in an economy where consumers are cutting back, and whether it's they're spending less dollars on restaurants or dining out or whatever it is, it's also starting to affect the streaming business as well, particularly Netflix in this case.
I do want to get to a couple of stocks that you like right now. State Street Industrial Select One was actually an ETF. Tell us more about that one.
So it represents the industrial sector of the economy, and we saw the industrial sector actually do quite well at the beginning of the year. We have seen it pull back here as the war has really been taking place. Manufacturing in the States still remains strong at this point. It's not extremely strong, but it is strong enough, above expectations at this point. So I do think that we could see some upside surprises in the near term here for some of the industrial companies. I mean, there's been a lot of, just recently, this rally really has been a technology rally. I mean, that's really what's taken place. That's what the emphasis has been on. But I think we might start to see it broaden a little bit into other sectors, including the industrial sector, because there's a whole bunch of infrastructure building on a longer term perspective, a lot of money flowing into overall construction, travel, et cetera. So it's still there. We haven't seen enough of weakening of the economy for this sector not to perform well. So I think it's going to perform well in the next little while.
Is that the same reason or the same reasoning for State Street Materials ETF?
Yeah, so in the materials sector, I mean, it tends to trade with the industrial sector, very close. Sometimes they're up or down. There is some differences. The material sector in the U.S. is primarily about 70% chemicals. It is economically sensitive, and it does have some metals and mining as part of that sector as well. I think that sector can actually do okay at the same time. So it's a little bit of a different combination, but it's the same general theme that the economy is still hanging in as far as the U.S. goes, especially relative to the rest of the world. We're seeing Europe struggling here a little bit. We're seeing Canada struggle a little bit. So in the States, as far as materials and industrials, I think that they're going to do okay in the next little bit here.
Let's leave it there. Brooke Thackeray, appreciate you joining us, sir. Thanks for your time. Coming up next, talking tax credits with Jamie Golenbeck, Managing Director, Tax and Estate Planning, CIBC Private Wealth. Back in a moment. Time to talk tax with that deadline quickly approaching. Experts say most Canadians don't take advantage of all the tax credits available to them. Let's start there with Jamie Golenbeck. He's Managing Director, Tax and Estate Planning at CIBC Private Wealth. Thanks for coming in.
My pleasure.
What is the most widely used tax credit? Let's start there.
Well, the easiest one, and the one that I think everyone takes advantage of, is called the basic personal amount. That amount is just over $16,000. That's not actually what it's worth, because that's just the base amount. And then most people get that at the lowest credit rate. So that rate for 2025 was 14.5%. It's going down to 14% this year. When you multiply that together, that is the value of tax reduction you get on the federal side. And of course, every province and territory also has a similar credit. So what that effectively means, in layman's terms, is that the first $16,000 of income each year is tax-free. And that's very helpful, particularly for children or young people that have very little income, even students. If their income is below $16,000, they're just not going to pay any tax.
They get to keep all of it, yes.
Exactly. So basic tax, all the software does that automatically for you. In fact, even if you're working, your employer automatically includes the basic personal amount when they calculate how much to withhold from your paycheck every couple of weeks. So
all right.
So that's the easy one.
That's the easy one. Let's get to the harder one. What is the tax credit you think that gets ignored the most but could be used more?
Yeah, so look, there's a lot of them that people have heard about, but some people forget what qualifies. So the most common example that I like to remind people every year is the medical expense credit. Mm-hmm. So everyone knows about the medical expense credit. Most people brush it off and they say, you have to spend at least 3% of your net income,
Yes.
which is a lot of medical expenses. But people forget that if you're part of a group private health insurance plan, let's say through work, but the work doesn't cover all of it. So you pay extra because you want those massages and you want that orthodontics coverage for your kids. The premiums that you pay that are not covered by your employer are considered a medical expense. Similarly, if you're part of a private plan and you don't have insurance through work, and you're buying sort of a monthly plan or something else that you pay for personally, all those medical insurance premiums from a private health service plan qualify as medical expenses. That on top of any prescriptions, any amounts that you're paying out of pocket, all that together can easily put you over the 3% threshold. So I think people forget about that, and that's something that people certainly can take advantage of. You can actually pool all your family's medical expenses on one return. So both spouses, both partners, any kids under the age of 18, all of that on one return, 3% of the lower income, and you claim that as a medical expense credit.
Why do you think Canadians miss out on some tax credits? Is it just too hard to dig out the details?
Well, I think a lot of people just don't know. We have a lot of people that, of course, want to save money, so they do the tax return on their own. No problem, I do my own tax return as well. The software is excellent. There's probably almost 30 different packages, some of which are free, depending on your income level and your situation. But the software is excellent. And if you actually take the time to run through the software, they often have interviews where you can do like an interview and they'll ask you all about your situation and you just answer the questions. But some people just sort of fill it in themselves and they forget. They forget because they don't know all the rules. Not everyone is a tax expert. Not everyone's an accountant. So look, if you are seeking professional tax advice, maybe you've got an accountant, maybe you're going to one of the tax preparers that open up in the malls or on the streets, this time of year, then great. Hopefully you're not missing anything. Hopefully you filled in those questionnaires. But people are often do-it-yourselfers. And therefore they know what they know, but they don't know what they don't know. And that's why, I believe that even if you do file your own return every year, probably not a bad idea once in a while to take it to a professional, pay them for a consultation, and say, what am I missing?
Are there any tax credits that are new this year?
So there's nothing really new for this year. There's one of them that's actually gone away. I remember when I was doing my return a month ago and doing a first draft, I was looking for that digital news subscription credit, but it's gone.
Yes.
It's gone. It actually ended the previous year. So no more digital news credit for anyone this year.
Tell me about the Ontario Trillium benefit.
So again, these are certain benefits that you may qualify for depending on your income level. Now, not everyone is going to qualify for this, and you have to fill in the data on your software. It's very unique to Ontario. But again, the software will do all the work for you. So if you properly calculate your return, then the government will determine how much you get as a benefit from that. Again, unique to Ontario.
Let's talk a little bit about specific categories. We see a lot of people taking care of their older parents, seniors, their active caregivers. Are there tax credits specific to that sector that can be taken advantage of?
Yeah, there can be, depending on you qualify. Again, the rules are complex, so you have to go online or speak to a tax professional. There's a Canada caregiver amount. Again, you may be eligible if you are taking care of either someone with a disability, a family member, an elderly parent. You may qualify depending on the rules. So again, that's something I would look into that for sure.
Okay, so what would be the biggest piece of advice you give to Canadians ahead of that deadline? What do they need to do? One you said was, every couple of years, take it to an expert. Yeah. But just for this year, what would you say?
Well, the most important thing is be organized. And you want to file on time, I'd say, for the most part. Deadline, of course, is April 30th for most taxpayers. If you or your spouse or partner have self-employment income, you actually have till June the 15th to file. But any taxes you owe are still due on April 30th. So probably a good idea at least to get an estimate of how much you owe. The problem with being late is, of course, that if you owe money, there's a penalty right away of 5%, then 1% a month for every month you're late after that. There's also interest. And of course, they charge you interest at a very high rate, and that interest is non-tax deductible as well. So again, I think it's very important to stay on top of it. Even if you can't afford to pay, you still want to file your return on time. And then, of course, pay it as soon as possible to stop that interest clock.
Jamie Golombek, thanks for coming in. Good to have you.
Thank you.
Air Canada will suspend daily flights to John F. Kennedy International Airport in New York because of soaring jet fuel costs. Bloomberg's Matthew Dion joins us now from Montreal with more on the story. Matthew, flights specifically, or why these flights specifically? Because they'd actually save, if they cut on the longer haul flights, they'd save more.
Yeah, exactly. It's about meeting for Canada. It's about meeting profitability targets here. So what they said, jet fuel prices have doubled since the war started in Iran, and some lower profitable routes and flights are no longer economic. So that's what the company said this morning. So they're making these changes. More specifically, the JFK route, there are only 3 flights from Toronto and 1 flight from Montreal. So they will be suspended starting on June 1st and will resume on October 24th. Alternate options will be offered to customers who had booked flights on these routes. Flights to LaGuardia and Newark will remain, and there are actually 34 flights from 6 Canadian cities going to these 2 airports. So there's a lot of options there that will remain for customers. So the route suspensions come, yes, as oil and fuel prices surge over the past several weeks, but they plunged today. But still, it's going to take some time for the market to recover. And yes, there's some hopes that there's going to be a deal that's going to be reached between the U.S. and Iran. But even that, if that happens tomorrow, still, I mean, shipments have to go through the Strait of Hormuz, and market has to steady before that happens. So it will take a while for jet fuel prices to come back to normal.
Has Air Canada indicated that any other flights could be suspended?
Yes, actually, the most important ones were the ones to JFK. But actually, the airline will also stop service between Salt Lake City and Toronto as of June 30th, with plans to resume in 2027 domestically here in Canada. The Fort McMurray Vancouver route will be suspended starting at the end of May, and the Yellowknife Toronto route will be suspended starting at the end of August. There were also plans for Air Canada to open up a route between Montreal and Guadalajara. It won't happen. That seems to be canceled for now. So overall, if you look at the big picture, I mean, these are few flights, and the capacity on these flights were quite small. So you have at Air Canada 1,000 flights daily. That's a lot. And here we're only talking about several flights. So in the big pictures, it's quite small.
All right, Matthew Dion, thanks for the update. Appreciate that, sir.
Thank you.
So Canada is pushing for a broader reset on trade. Canada-U.S. Trade Minister Dominic LeBlanc says Ottawa wants to address long-standing frictions with the Trump administration through a comprehensive deal rather than one-off fixes. We're joined by Bloomberg Laura Dillon-Kane on this.
He was asked in a parliamentary committee by an opposition lawmaker about this long list of irritants that the U.S. says is still in place. And he was pressed on why Canada hadn't made any progress on solving these issues yet. And his response was essentially twofold. First of all, Donald Trump called off the talks toward a deal in October. At that time, Canada had been working toward a deal on steel and aluminum tariffs in exchange for increased access to Canadian energy through a revived Keystone XL pipeline. Now, Donald Trump called those off, of course, when he was angered by Ontario's Ronald Reagan anti-tariff ad. And his second response was, we're not just going to sign quick one-off deals to resolve these various issues that the U.S. complains about. We want to sign a broader deal that gives us more clarity on how our tariff-hit sectors are going to be affected and how the USMCA review is actually going to progress. Of course, that latter part is quite murky at the moment. And so I think what this indicates really is that Canada has learned a few lessons since last summer when Prime Minister Carney did give in some quick concessions to the U.S. and didn't get much in return or anything in return, right? Last June, or it was late June, early July, I believe, that the Prime Minister dropped Canada's digital services tax. And in doing so, he didn't really get anything concrete in return. Donald Trump raised tariffs on Canada anyway later that month. And then after that, the Prime Minister did drop retaliatory tariffs, or many of them, in the hopes to keep the conversation going to work toward that deal, which of course then blew up in October. So Canada sees that it can't just give these quick concessions anymore, and it also perhaps senses we have some leverage right now. We have oil, we have critical minerals, we have things that the U.S. needs, particularly right now, and so we're pushing for something broader that will give us more relief from U.S. tariffs.
So is this Canada going to play a little more hardball then? And any idea what we expect as a reaction from Trump and the Americans?
Well, we did see, I believe just now, the Commerce Secretary, Howard Lutnick, said they suck out of Canada, and that was in response to our former trade negotiator. Indeed, yeah, that was the criticism. And that was in response to actually a Bloomberg story on our former trade negotiator in the last round, saying that time was on Canada's side, that we could play a little hardball here because of the U.S.'s energy needs right now. Canada has what they need. They are in grave need of more energy at this moment because of the war in Iran. And so we do have a little bit of time, perhaps, to push for something broader. And so at least the Commerce Secretary was none too pleased. It is Jamieson Greer, the U.S. Trade Representative, who is in charge of the USMCA review and handling these talks right now. And so, we can have some hope, perhaps, that he's going to take a slightly more measured approach. But so far, some bluster from the Americans, put it that way.
Some bluster from the Americans is not surprising. These talks have been going on with Greer and in the background, and it feels like they might be a little more civil, but they get serious. Are they serious now? Like, they're obviously anything is serious, but are they going to get really serious as we get into June?
I believe that's the goal. The one thing to think about is that the USMCA review, it may not wind up being a comprehensive overhaul of the agreement, starting on July 1st. What Dominic LeBlanc has started to forecast is that may go on for some time. Those talks may continue on with regards to that deal, because this sort of 10-year annual review process kicks in July 1st, assuming that it's not renewed, and we do expect that the U.S. does not want to renew the deal as it is, that it wants to see some changes. But one thing to think about is that we are also expected to continue to work towards some side deals, like that deal that was being worked on in October.
Bloomberg's Laura Dillon Kane there. Netflix shares down today after a muted outlook from the company, and also news that the co-founder is leaving. More in a moment. It's the end of an era at Netflix. The co-founder, Reed Hastings, is stepping away after 29 years, just as the company posts first quarter earnings with a muted forecast. Let's go to technology analyst Carmi Levy on this. Carmi, thanks for joining us today.
Good to be with you, Marilla. Thanks for having me.
How significant is the loss of Reed Hastings here?
He's the co-founder. He's kind of a maverick leader, right? Pioneered this new approach to employee culture, really a shining light in Silicon Valley, and, winding up an almost 30-year history with the company. This is a major inflection point for Netflix. And whenever companies see a transition away from, sort of the leader who is most closely associated with that culture, there's always going to be a question. Apple went through it when Steve Jobs transitioned away toward Tim Cook, and now we're going to see Netflix go through that same sort of shuddering moment as investors digest whether the company will be as successful after him as before him.
Okay, so Netflix is doing okay. They're earning a lot more revenue from ads, which they have introduced, but clearly investors aren't liking what's going on. What's your take on this?
Yeah, it's a very different world than it used to be when Netflix enjoyed quarter after quarter of double-digit growth and kind of the sky was the limit. Much more competitive landscape now. And of course, it's a mature market, so they can't count on net new customers coming to them. They have to extract more from the ones that they've got, fight harder to keep them from bolting to the competition. That certainly doesn't help when you're issuing warnings that your growth is going to be substandard, below expectations for at least the next quarter, if not beyond. And so, this is a company that the bloom is definitely off the rose. They are in a very different world. They just came off that failed bid to purchase Warner Brothers. They essentially ceded the floor to Paramount. And so there are a lot of questions about if the company has the same ability to continue to drive growth. Will it be able to build its advertising business fast enough to offset the shrinkage in growth of its subscriber base? Will it be able to extract more revenue from the average user by driving them up to that next tier of the subscription, or are they going to lose them to the competition? Lots of questions, not a lot of answers at this point.
Yeah, it's funny because it's not that they're not making money. They're making money, just not enough necessarily for investors to love it right now. The NDP's motion to ban algorithmic pricing defeated in the House of Commons. But tell me a bit more about what they're trying to accomplish here.
They're really trying to, and I don't think they knew or they believed that this was actually going to succeed. This is a party without party status, and it was just, it was a unanimous consent motion that was destined to go down to fail. They simply wanted to get it on the radar so that consumers are aware of it, that it would start a national discussion. So from that perspective, mission accomplished. Because up until now, we've been dealing with algorithmic pricing. Buy an airline ticket, buy insurance. You are dealing with this. Everyone pays a different price based on the conditions around it, based on the data that the company has around that transaction and around the specific customer. But now we're starting to see it creep into more sectors, particularly retail. And there's concern that the amount of data that's being collected, that consumers don't have that visibility into that process. It's a bit of a black box, and that means somewhat dirty pool. The playing field is certainly not level. So certainly as the business environments around retailers continues to intensify, they're going to be looking at these technologies to drive revenue, drive margin. And there are a lot of people that's saying that better rules, better frameworks are necessary to ensure that everyone knows what's happening as they go into this transaction.
Yeah, clearly better rules are also needed around AI and chatbots and what they can do. Anthropic, of course, won't publicly release Mythos, but what do we need to get ahead of, or how are we going to get ahead of this government-wise when we have these chatbots now that can hack into systems?
We're not going to leave it to the largesse of the technology companies themselves to define the rules. And that's kind of where we're at now, as Anthropic has said that they are going to ensure that the code is protected. It will not go into broad-based release. They're going to make it available only to specific technology partners like Apple and Google and Microsoft, so they can develop better protections against AI-powered cybersecurity incursions. But the problem here is we're relying on the company to live up to its promises. There are no consequences if they don't. And this is code that's already leaked. So this is why we want to have some kind of AI regulatory framework around it to hold these companies accountable as this increasingly powerful software, these platforms, these large language models are released into the wild. Today, we're talking about Anthropic, but OpenAI has similar models in the pipeline, as does every other major AI player. This is a conversation that needs to happen soon. And it should be accelerating the rate at which AI-centric legislation is introduced here in Canada and elsewhere.
Carmi, got to leave it there, sir. Thanks for joining us. Have a good weekend.
You as well, Marilla. Thanks.
Actor and filmmaker Ben McKenzie calling out the crypto industry. We'll tell you why in just a moment. Actor and filmmaker Ben McKenzie is calling out the crypto industry in his new documentary, Everyone is Lying to You for Money, warning its risks could spill into the real economy. He joined Bloomberg's Open Interest.
The pandemic and showbiz was on ice. There was nothing for me to do as an actor. I was kind of looking for something new to do anyway. I don't want to call it a midlife crisis, but like a midlife questioning, I guess, over the pandemic, like so many of us did. And I do have a degree in economics as an undergraduate. I hadn't used it much in showbiz, but a buddy of mine came to me and said I should buy Bitcoin. But my buddy had given me terrible financial advice before, and I was like, Dave, I'm not going to do that. What is it? And he said it's a cryptocurrency. I said, okay, so it's a money. You can buy and sell stuff with it. And he's like, And I just thought, what is going on? So I got obsessed with it, and a slow process, but eventually, reached out to a journalist. We started reporting on it and sold a book. And then I turned a camera on in the middle of that experience because I figured crypto's full of very colorful characters, and maybe I'll document something. And the first day of filming, I met a guy named Alex Mashensky, who is now in jail for running a Ponzi scheme.
Yeah, 2 people you interviewed in jail for this film, is that right, too?
Are now in jail, yes.
Are now in jail,
I interviewed them before, yes.
This is before the blow-up. That SBF interview was before we knew he was a bad actor. I have to say, in 2013, I lived on Bitcoin for a couple weeks as an experiment, kind of a gag for Bloomberg. And back then, it was a very different ethos. It was more of a libertarian thing. It was less of a rug pull, con artist scam. And do you document the change that we've seen in crypto?
I mean, the events of the film This is a tight 90-minute comedy, so there's only so much bandwidth that I could cover. In the book, I talk about the origins of Bitcoin. And you're right that it sort of came out of the cypherpunk thing, which is sort of libertarian-ish. Although I will say, really, Bitcoin's first use case was crime, because it was through the Silk Road, that dark web drug marketplace. So there was this still a little...
pizza.
Right, crime and pizza. Yeah, that's right, pizza first. Yeah, that guy. Oof, bad trade.
Someone bought 10,000, two pizzas for 10,000 Bitcoin.
Yes.
Yes,
very
now
logical.
worth
Yes.
billions, I'm sure. Sorry, I lost my train of thought.
Well, you did talk to a lot of people in the film. I saw a clip of it as well, like Gerard Butler, who said, like, I made a ton of money on this.
Yeah, but I don't understand it, which is like a perfect illustration of a lot what happens in crypto, which is like...
I also feel like in the film, you were getting a lot of questions that were like, is any part of the crypto industry legitimate? And I feel like you kind of struggled to answer that question, to see like where the real legitimacy was.
Right.
Could anything happen in this industry to convince you that it could be a thing for good, that it does make sense, that it has merit to exist?
I'm not advocating that it be outlawed, because I don't think that would work. I think it has to be properly regulated. In my opinion, and it's a little bit more nuanced than what's presented in the film, but I basically believe that all of the speculative cryptocurrencies, Bitcoin, Ethereum, Melania coin, Trump coin, fart coin, I believe all the ones that price can go up and down, I believe those are really investments for the retail public and should be treated as securities. The industry does not want them to be treated as securities because, of course, securities laws are predicated on disclosure, and you're supposed to know who you're giving your money to and what they're doing with the money, and crypto really doesn't want that, which I think is worth crypto industry, which is, I think, worth pondering why. So the speculative side, they should be regulated securities. On the stablecoin side, the stablecoins are cryptocurrencies pegged one-to-one with real dollars. I think we have to ask ourselves, so it's a thing that's claiming to be a dollar and yet it's not backed by the full faith and credit of the United States. Isn't that a counterfeit dollar? Because what those stablecoins are used for is crime, primarily. A crypto company estimated that last year $154 billion of criminal activity was facilitated via cryptocurrency, and most of it is facilitated via stablecoins. Right now, ships are passing through the Strait of Hormuz, paying tolls in cryptocurrency. Russian oligarchs are selling sanctioned oil to the Chinese in exchange for drones they're sending to Ukraine, all facilitated via cryptocurrency. So is this something that we want? I would argue quite strongly that it is not.
One of the things that the pro-crypto crowd would argue is that everything is documented on the blockchain. So they would say, like,
but it's also synonymous. But it's also synonymous, right?
Yes.
So you also have privacy, but it's also clear as day, and that's just not true. I mean, there's a fundamental tension there. So a blockchain is just a ledger, but it is a pseudonymous ledger, and it is quite difficult to track transactions on the blockchain, or I should say, it's quite difficult to track transactions because many of them don't happen on chain. There's over-the-counter desks where people are exchanging dollars for crypto. So it doesn't look like the money has changed hands, but it has. The crypto has changed hands. So there's a lot of different, there's these things called crypto mixers, where you put your crypto onto this thing and it jumbles it with all these other cryptocurrencies, which makes it very hard for law enforcement to catch up. And then, of course, the Trump administration has gone out of its way. They disbanded the Cryptocurrency Crime Task Force. They've gutted the SEC. They passed this thing called the Genius Act, which allows corporations to issue their own money in the form of stablecoins. So literal
Stable Genius Act.
Yeah, exactly. I mean, if it's called the Genius Act with this Congress, it's got to be stupid. Anyway, they're doing what they can to make different rules for themselves. And why? Because they don't want the scrutiny that applies to other securities or applies to banks, right? There's a whole battle right now on Capitol Hill between the banks and Coinbase over this thing.
I was going to say, and yet the biggest, look, there are critics on Wall Street, Jamie Dimon, like chief among them, and yet JP Morgan and the biggest banks have, crypto trading desks.
Exactly, and what are they doing? They're just they're not taking a directional bet. They're just facilitating the trade. This is the oldest time. Wall Street is just, there's a BlackRock ETF. They don't even touch the Bitcoin. BlackRock Bitcoin. They don't even touch the Bitcoin.
Right.
You give them the money. BlackRock goes to Coinbase, says, hey, this represents a share of a Bitcoin. Hold the Bitcoin for us. The decentralized, democratized future of money brought to you by BlackRock? I mean, what are we talking about? It's all nonsense.
And for those that have experienced the rug pulls, like the Celsius, the people you interviewed, obviously for them it's an extremely painful thing. For many of them it was deeply embarrassing. But I wonder if this industry is big enough that you worry about wider economic consequences.
I do. I mean, the thing that's changed since 2022, because of the Genius Act, because of Trump's promotion of this, is crypto has integrated itself much more fully into our regulated economy. In the film, we document the 3 banks that failed in the spring of 2023, just months after I testified to Congress and said, if we don't get a hold of this, there's going to be hell to pay. And sure enough, the 3 banks all had ties to cryptocurrency. Doesn't matter what the crypto industry said. That's the truth. It could be far worse. If there's a downturn, right? The things that are most speculative fall the fastest. Historically, that's what happened in 2022. Let's say crypto experiences a real downturn. Let's say ETF holders want to sell $10 billion of a Bitcoin ETF in one day, as opposed to one. Is there really liquidity on the other side? Are there really $10 billion worth of buyers? I would argue we don't know, but that seems very, very dangerous. And then what happens if that downturn leads to a bigger downturn, and then the fake money has been mixed with the real money, the crypto with the real stuff, and now we end up bailing them out, which would be incredibly ironic, of course, because crypto was set up supposedly in opposition to the subprime crisis and the failures, and they would have recreated the same thing.
Ben, I wonder what kind of feedback the film's not out yet.
It's out this week.
Okay. I wonder what kind of feedback you've gotten, because everyone knows about the project in the industry and the book, from people, big names in the industry who aren't in prison or in the White House, right?
I have a great example of that. Can I just jump in?
Yes.
So, New York Times has said Adam Back is potentially Satoshi.
Yes.
You follow this. I don't know that that's proven, to be blunt. I didn't see incontrovertible evidence. I saw a lot of circumstantial evidence. But he's a likely candidate. He's a British cryptographer. He was the first person Satoshi emailed. Certainly could be. Here's some fun facts about Adam Back. Adam Back, his company Blockstream received funding from Jeffrey Epstein. That's in the Epstein files. Also, Adam Back hates me. I never met him, never interviewed him. He's referred to me as a crisis actor, which is funny because I am an actor and it is a crisis, so he's very close to getting it. But I don't know. Maybe he's just not a fan of the OC. I don't know why he's so upset
Everyone's
with
a
me.
fan of the OC.
There we go. That's what I was looking for.
All right, let's get to this. Elevated oil prices driven by ongoing instability in the Middle East. Canada may be seeing a shift in consumer behavior. So while overall new car sales declined in February, electric vehicle sales moved sharply higher. CTV's Annie Bergeron-Oliver has more.
Electric vehicles don't sit on the lot long at this Ottawa car dealership.
We're actively always trying to get more vehicles in our inventory for this.
Sales are growing and customer interest is too.
Sales have increased for sure through the whole customer market looking into EVs.
Across Canada, more people are making the move from gas to electric. New data show that in February, electric vehicle sales increased 47.2% over the year before, while the sale of new passenger cars dropped.
In addition to the government incentives which are coming, obviously the war in the Middle East and kind of the impact on oil, but also the prices have gone down by a few thousand, so kind of, a few percentage points, and that had some of an impact.
Experts say Canada can meet the current demand, but in the years to come, far more investment in the energy grid and charging infrastructure are needed.
If a gas pump failed 1 in 20 times, there would be an outrage. And to support this wave of new EV drivers, we need to hit telecom grade reliability, and that requires upskilling our trades, our electricians.
Those upgrades will be even more important as Canada begins selling a limited number of Chinese electric vehicles. Experts believe that move alone is likely to push up EV demand and bring prices down. But some fear the true cost of those changes.
If we take a wrong turn, an entire industrial ecosystem could be hollowed out or captured, leading to a dependency that erodes economic security, sovereignty, and democratic values.
Canada's Privacy Commissioner called on Parliament today to strengthen data laws and enforcement. Some experts have raised concerns about what kind of information these high-tech cars from China are collecting and potentially sharing.
Annie Bergeron-Oliver reporting there. Let's have a final look at how we ended the trading week. The TSX Composite gaining 0.9%, 294 points up on the day. The S&P 500, a record high at 7,126. It moved up 1.2% today. And then a record for the NASDAQ as well. It's up 1.5%, or 365 points. ending the day at 24,468. Let's get to oil pretty quickly if we can. It came down, of course, with the news out of the Middle East, dropping at $9.51 for West Texas in May and taking the price to $85.15. Thanks for joining us today on The Close. We'll see you back here on Monday.